With interest rates rising, it looks like the stock market will fall. But does this mean that cryptocurrency will do the same? In this video, we'll look at a correlation analysis between stocks and cryptocurrency to see if crypto will fall if stocks do as well. For this study, I got data from Yahoo Finance for the Dow Jones Industrial Average and Bitcoin, dating back to 2015. I then did a correlation analysis between these two data sets for every year. So what is correlation anyway? Well, a correlation is basically the relationship between two data sets. The values range from -1 or -100% to +1 or 100%. A value of 0 means that there is no correlation between the two. -1 means they are negatively correlated. So for example, you could think of Bitcoin and BTC down, and a correlation value of 1 means they are almost perfectly positively correlated. For example, gold and silver would be close to that, or Bitcoin and Ethereum would be close to that. So we're going to see the correlation factor between Dow Jones Industrial Average and Bitcoin. I first did the correlation analysis between Bitcoin and the Dow Jones Industrial Average, looking at weekly data points. As you can see from 2015, the correlation factor was only 6.6%, which means they're basically uncorrelated. This means that if stocks went up that week, then it didn't really indicate whether or not Bitcoin was likely to go up or down that week. During that whole year, the Dow Jones went down 2.6% and Bitcoin went up 46%. However, when we look at 2016 and 2017, we get a very different story. The weekly price data of the Dow Jones Industrial Average and Bitcoin were fairly correlated during these years, of 84% and 91%. This means that they sort of moved together that year. And you can see that from the percent return, where the Dow Jones went up 20% and 25%, while Bitcoin went up 127% and had a crazy 2017 year of 1,272% return. So far, we can see that when the Dow Jones goes down, it seems like the two are uncorrelated, while when the Dow Jones goes up, they seem to be highly correlated. Let's see if that continues for the rest of the period. Moving on to the 2018 year, all the way up until October 2022, the results do look fairly correlated, with an average correlation of this period of 51%, which would be a moderate to strong correlation. In 2018, there was a 28% correlation, 2019, 49%, 2020, 68%, 2021, 29%, and so far this year in 2022, an 81% correlation. One theory in the world of finance is that everything falls together. So let's look at the worst performing years of the Dow Jones Industrial Average and see how Bitcoin performed during that period and the correlation between the two. We will then compare that to the best performing years for the stocks and see if the correlation between the two was stronger or weaker than the worst performing years. Again, the main point of this video is to see if stocks fall, if Bitcoin will fall with it. So by looking at the correlation between the two when stocks go down, we'll get a better idea of what we're looking for. We can see that during the worst performing years for stocks, which is 2015, 2018, 2020, and 2022, the average correlation is 46% during these years. While looking at Bitcoin's best performing years, we see a much stronger correlation of 63%. This is the opposite relationship that I was expecting. I thought that when stocks fell, that Bitcoin would fall with it as people took out their profits, and therefore the two would be correlated together. But that's not what we saw, which is a good sign. Another theory that I heard is that stocks and Bitcoin are becoming more correlated over time. So let's compare the early parts of the data set to the later 4 years of the data set and see if there's any trend of the correlation increasing over time. Looking at 2015 to 2018, we see that the average correlation is 52%. Now looking at more recent data of 2019 until October 2022, we see an average correlation of 57%. The correlation is basically the same here, at about a 4 to 5% increase in correlation, which is basically negligible. This is also the opposite of what I would have expected. I would have thought that Bitcoin and stocks would have been very uncorrelated during the period of maybe 20% during the early years, but in the later years would have got more like 80%. But we didn't see such a strong difference between the earlier parts of the data set and the later parts, which again is a good thing. I also did a correlation analysis between Dow Jones and Bitcoin, looking at monthly data instead of weekly data to see if the monthly changes during the year are correlated with each other. And we basically get the same result of a correlation of about 49%. It's interesting to note that in 2015, there was actually a negative correlation between stocks and Bitcoin of negative 29%. This means that the months when stocks went up, Bitcoin actually was more likely to go down during that period, and vice versa. If we see further downside in stocks, does that mean that Bitcoin is doomed? After seeing how Bitcoin becomes moderately correlated to stocks when stocks go down, and how the trend of correlation over time is not increasing in any meaningful amount, I don't think this is necessarily a for sure case. Of course, if stocks go down, that's not really a great thing for Bitcoin, but it does not mean that Bitcoin can't see okay or even a good year during this period. So keep your head up, put some cash into crypto that you can afford to lose, allow us here at Tradium to help you manage that, and you'll be good to go. Thank you for watching, and I'll see you in the next video.